Hello, everyone. Thanks for joining us today for another episode of the Scaling Alpha podcast. Today, I'm joined by Noah Kann, co-founder and co-CEO of Venari Asset Management, who I've just learned is a twin just like me. They're a public markets investment firm he co-founded with his twin brother in 2025, focused on research-driven investing across applied AI, power and infrastructure, and defense and security. Noah co-founded his first hedge fund while still at university and has since appeared on Schwab Network and Fox 5 DC discussing markets and investment analysis. Noah, over to you. Could you take us through your background and how you got to where you are today?
Yeah, thank you so much for having me, Ben. It's great to be on here. So, my journey started when I was 16 years old. My brother and I created a financial literacy nonprofit. And the premise of actually why we got into finance stems from my mother. So, she's been on Wall Street, she has, her MBA, and she inspired us during COVID. So, this is March 2022 when the markets crashed. A lot of people were panicking, and rightfully so. And so she posed a question to us as, you guys are in a place of privilege, we've done very well. And so find a way that you can help people. And so as a 16-year-old, there's not much we can do, but what we can do is learn. And so we did a lot of digging and due diligence, and we learned that financial literacy and teaching people our age around us in the Dallas area at the time would be a great starting point. And so we built our financial literacy program. We partnered with Big Thought and JP Morgan Chase, and that was kind of the crux of what we're doing. So, fast forward, we've had a few startups that were in the fintech space working with private equity firms, and we've had a previous hedge fund called Sage Tech Capital that did a lot of equities and options trading. We even dabbled in crypto 5 years ago. That was interesting. The volatility there was something even a 19-year-old in college found it hard to stomach, as some of you can imagine.
Yep.
And that leads us to today with Venari Asset Management. And so our belief is that not only do we want to create capital for our investors and our constituents, but we want to make sure that the investments we make sense. I don't just
Yep.
want to place a trade and then, say, oh, we did it because markets are hot. No, I really want to dig into the business. Like, is this company changing the world now? Is what they're doing necessary for the world now, or will it be necessary in the future? And then if it is necessary, are they the right ones to execute that plan? Right? Ben, you and I both know there are a ton of great founders and great managers that have great ideas. But the difference between a great founder and the founder that everybody remembers is execution.
Yep.
Knowledge can be a commodity. Execution is a skill that is impossible to replicate.
That's 100% true. A lot of people go into starting companies and they think that the idea is the thing. If you look at any great idea, you'll probably find a list, of names a mile long who've thought of a similar idea but weren't able to figure out how to put it all together and execute. And speaking of execution, right? You started a first hedge fund. It sounds like you were executing that one well. Tell me about that hedge fund and what's different between that hedge fund and what you're building here with Venari today.
Yeah, great question. And honestly, it's actually one of the most asked questions by investors. So good to know that great minds think alike.
Yeah,
So
yeah.
my brother and I started Sage Tech Capital, and 2 years ago, or I guess 2.5 years ago. So this would have been like October of 2024 is when we launched trading. So it took us around 9 months to actually set up the firm. And we were SEC licensed, so we were an ERA, exempt reporting advisor, and Regulation D and all the protocols that come with that. And so we wanted to do it the right way. And the right way in finance, when it comes to investing, the right way can be more independent. When it comes to financial structures, the right way is definitive, right? Like this is how
Yep.
it's going to be. You don't want to try something new because every single time somebody try to do something a little different, FTX, their things don't go very well because capital is important. People work jobs to make money and provide value. But a lot of the
Mhm.
times it's based on making money, which is completely okay, right? You got to feed your family. You got to go on nice vacations and enjoy your life. And so for us, that the value of solid execution the right way was between my brother and I was highly valued. And there were some other partners, that I'll remain anonymous, that maybe wanted to push things a little too fast, a little too quickly. And so
Yep.
while we got strong returns and while our constituents were happy, my brother and I, Ethan, wanted to make sure that, okay, so this was our foundation. Where do we go from here? And since we had these disagreements, which is totally natural, the group of partners collectively thought, okay, maybe it's best that we just take the win, right? And sometimes when you're doing very well and you have profits and after fees, it was still, I think net of fees was like 25 3 months, which is unbelievable. I was so happy. And I was like, wow, I didn't even expect this, right? I don't think I could replicate that again. I'm certainly going to try, but I don't want to have unrealistic expectations. And so for us, we were like, okay, that was why we needed to stop it. And that kind of lays into Venari, which is we have taken this slower. And slower doesn't necessarily mean that we're not making the same kinds of investments, that we're not making the same kinds of trades. It means that the process and execution, so like investment committee, our portfolio managers, the CIO that my brother and I are, the organizational infrastructure is different. The legal infrastructure was the same, but in terms of like the operating agreement, right? Like there were a lot less layers at the old firm. And in this firm there's like, maybe two more, but those two really matter. And I think a lot of times people and founders want to jump right into the idea. They want to start building the product. Well, sometimes you want to make sure the product people actually want. And as a hedge fund, we want to make sure that our investment structure can handle at scale. So the
Yep,
biggest issue we had at the old firm was we would not be able to scale at the rate we can scale at Venari because we didn't have the necessary layers. And so that's
got
why
it.
we kind of started again, because we wanted to make sure that the foundation could build a skyscraper and not like a townhome, if that makes
So
sense.
when you say the layers, it's not the layers still have to be in the operating, but ultimately, are you outlining in more detail the types of strategies or assets or things that you can do to get a market capacity, right? That can support what you want to build.
Exactly. So, yeah, the operating agreement obviously was the same. It
Yep,
was more about the culture of the firm and what it took to really build something institutional. So, we
yep,
raised a lot smaller round last time because we were still trying to figure it out. And so, we wanted to take on only the amount of risk and size we could handle. And so now when it comes to like the structure of strategies and like the amount of how we place the trades and the diligence we do on the investments and the thought process behind these investments has matured drastically from 2 years ago.
So that kind of parlays into my next question, right? If you look at the majority of hedge fund managers out in the world, they've spent years at other shops honing how they look at the market, learning about the market, all the things that they don't know that you can only learn by experience. What did you tell me some of the advantages or disadvantages of going kind of this track directly to starting your own firm? I know you had a couple tech startups that you did, and sounds like they've been quite successful, but running a strategy, you know, without years of experience on the buy side, there's advantages and there's disadvantages. What are those in your mind, and what have you learned over the last 2 years?
Yeah, so I'll start with the disadvantages. I like to hear the bad news and then the good news. So
Yep.
disadvantages, I would say the biggest disadvantage was the emotional stability. So with besides the actual execution, which is very important, I think the most tangible thing that we learned was the emotional stability. And so when you're investing your own money, right? It is very different than when you're investing somebody else's money. Because then if you
Yep.
lose your own money, that sucks. Obviously, none of us like it. When you lose somebody else's money, well, it sucks for you and it sucks even more for them, right? Because they entrusted you with that capital. And so I think becoming a true steward of capital was something that we learned very quickly and very aggressively. And so I would say the first disadvantage is being able to stay grounded under pressure, because when you start to feel that pressure, you start to make poor choices. And we were lucky that we partnered with older people that had 5, 10+ years investing.
Hmm.
And so we tried to kind of mitigate that disadvantage of being younger. I'd say another disadvantage is understanding geopolitical. So besides like understanding a business, right? If a lot of people can invest in a company and do a lot of due diligence and fundamental research, and a decent amount of people can come to the same conclusion. I think
Yeah.
one thing that as a younger adult is that the geopolitical like tensions and things that happen across the world that very much affect macroeconomics and the public markets that we've definitely seen in 2025 and 2026, I was actually not prepared for. I thought like, oh, like this is how the political system in the US works. Well, every single country is different. And if you look, ever since we were doing a lot of macro investing, every country matters. Like the UK just had their prime minister resign. The US hasn't had something like that since like the 1980s and 1970s. And that
Yep.
was maybe only once or twice, right? And so kind of understanding the tensions in the world and how that affects capital outflows and inflows from these companies, I'd say was like that was tough. That was really hard.
Yep.
Yeah, on the advantages side, I would say for us, it was boots on the ground. Like we had
Hmm.
we had responsibility from day one. And so we had an advisory board and an investment committee and a partner that were all much older than us. So we didn't kind of just go into it saying, okay, like we know what we're doing. So it was also all family and friends as most first funds should be. And so I would say for us, it was getting to see everything real time, like day
Hmm.
by day, hour by hour, helped us learn a lot faster. So I'd say the advantage of doing it on your own is you're going to learn really quick if you're cut out for this and if it's right for you. And so a lot of people, can be great individual investors and have extraordinary returns. But the second they
Yep.
have somebody else's money, they just make
Yep.
poor choices, which is totally fine. So I think for us, it allowed us to figure out this is something we're really interested in and this is something we want to do. So I'd say the best advantage is the learning opportunity. And then the extra advantage is if you actually do well, you get a track record really young that's your own. And I think the
Yep.
biggest reason we did it and the biggest advantage is we knew that we had something solid. We had a good strategy and we wanted to show people that this is important and this is going to make money. And we were very fortunate that it did. So the lessons I learned, to kind of like sum up the whole thing was your trade, your results, your responsibility, right? And I think that the greatest lesson I learned was truly taking responsibility for something that is my own and being able to explain it to a lot of people. So it helped me with logical breakdowns, right? How do I build out a thesis that that internalized makes sense in my head, but then Ben, I can share it to you and you can be like, okay, that makes sense. I'm willing to put X amount of dollars
Yeah.
behind it. And so I
Yep.
think that accumulation of lessons really helped also shaped us as adults, as young men. I think it put a sense of maturity and forced responsibility that a lot of people our age don't get. And so
Yep. It's
obviously I'm
true.
very glad it ended well, but it helped us just grow up. Like just bluntly, it just grew up in all senses of the term.
It's interesting you mentioned about the getting a track record that's your own early on. So I used to raise money for hedge funds, and a lot of managers coming out of regular kind of larger shops. And it's surprising how hard it is to take a track record out of those shops, right? And then
Yeah,
having to, even if you have that experience, oftentimes they're going to want to see you to run it, start it up, seed it yourself, actually prove that you can replicate it before more people are going to give you money. So there is something to your approach. If you can find money to run something and start your track record early, assuming you can do a great job at it, that in a lot of ways, if you succeed, you've just cut many, many years out of that process, right?
absolutely. Absolutely.
So let's go into Venari. Give me the 30, 40-second elevator pitch on your investment strategy, right? What is it and where does it fit within the boxes, or maybe it doesn't fit in any of the boxes that are common in the hedge fund industry?
Yeah, so Venari Asset Management is a multi-strategy hedge fund, mainly focused on public markets. Our strength is in macro investing in equities, so a long-short equities fund. And then we have a systematic sleeve in the futures realm. And then we have a kind of option sleeve focused on spreads, so mainly 2 to 6 leg spreads to kind of hedge out the macro thematic approach. We're mainly focused on the AI infrastructure, applied AI, so like agentic AI, American dynamism. So you think defense, you think natural resources, you think rare earth minerals, and we do an approach that is based on a rubric. It's a 100-point rubric, and so we have different categories for investment, and then we make sure that our thesis aligns, on a grand scale with our rubric, and then we look into execution from there.
So see if I can kind of rephrase that. Sounds like it's multi-strategy. It sounds like
Yep.
three strategies, right?
Yes,
One
that's
is
right.
more of a macro, directly investing in the equities. One is the options strategy, right?
Yes,
Tell
that's
me the
right.
third one again. And the third one
That one
is
is systematic, so like algorithmic trading. Yeah,
Algorithmic trading. Got it. Got it.
yeah,
But
yeah.
those three strategies are designed to work together to generate. I'm sure there's got to be some sort of risk framework, some sort of methodology that you have to how do I say it? Produce the kind of the risk adjusted returns you're hoping for. So
That's exactly correct.
is the capital in the strategies dynamic where you could put some into some, you can they can flow in and out of strategies depending on maybe the market regime we may be in?
That's exactly correct. And I think with markets that are ever changing, hedge fund managers have to be more on their feet than before. And so
Yep.
our goal, is not to necessarily be the number one macro. I mean, well, I should rephrase that. Our goal is to be the number one macro manager. But in terms of risk mitigation, right, I'm not going to put all my eggs in one basket. So we do believe in higher conviction. We probably have between 15 to 25 names in the equity sleeve at any given time. But a lot of the intraday movements in high volatility has also made way for these options. So the option sleeve, right, is more of a trading mechanism. So that's by a discretionary, trader.
Yep.
And that is allowing us to, when it comes to like these call spikes and selling calls and kind of premium movement that we haven't experienced with like inflated IV, right? So that means that the premium on these contracts, the movement is much greater. And so it allows for a lot more opportunities. And so we thought, okay, well, on the equity side, right, we have long fundamental companies we believe in. We believe these
Yep.
companies are going to make a difference in the world and they're the right executioners to do it, right? That's kind of like the core thesis. And then on the option side, it's like, okay, we're mainly trading indices, we're mainly trading ETFs and index funds. And with all these kind of volatile movements they have, like I said, it creates those windows of opportunity. And then on the systematic side, the algorithmic side, right, that's more of your placing trades here and there on commodities and futures markets, right? When you see those big discrepancies. And so that one does represent the smallest amount of our fund, usually around 10 to 15% at most. The
Mhm.
equity side is around, 50%. And then the remaining, let's say 35 to 40% is the option sleeve.
Got it. So you mentioned you invest in different areas of the market like AI, applied AI, enterprise software, power infrastructure, defense and security. You know, how do you approach researching those markets differently than others may be, other hedge funds might?
Yeah. So I think one thing that we've really honed in on is it's a term I like to call industrial excellence. And what I mean by that is the people that know the industries the most are the ones that are inside those companies. And so I, like as much public information I can find, I like to interview employees at these firms, right? And I'm not asking them about their specific company because, I only, follow the information that's readily available, but I like to kind of understand how do these industries work, right? So I'll give an example. So with the Strait of Hormuz closing for the time it did,
Mhm.
and we'll see how long that remains to be
A
open
lot
or,
of it
or
remains open.
unopened. Yeah,
Yep.
yeah. Everybody's talking about oil, which is obviously very important, very important.
Mhm.
But another very large export that comes out of that is actually fertilizer. And so
Mm.
one thing I did was call a friend of mine who owns like a big private farm, not and I said, "Hey, like what are the kinds of fertilizers that come out of Iran and the Strait of Hormuz that people buy and need like day to day? Like what are people using?" And so then I'd get a kind of a list of these fertilizers and then I would, go to the public companies and kind of see which companies make this fertilizer and then kind of do my research from there. But yeah, I like to do it as interviewing industry experts, right? Obviously in a public setting, and then just understanding like what's going on from their point of view, right? And
Mhm.
then don't ask them names. That's where I come in. But I just like what is the industry and where are we headed and what is happening in the world that makes it that way. And so it does, take a little more time to find and reach out to these people, but it really gets me to understand what's going on at a level that's a lot more than just placing a trade, right? If my investors'
It's
capital is
interesting.
very important.
How do you make that a repeatable thing, right? Or getting in touch with these people. I'm sure you must have a system. You must have
I do.
a big chunk of your day devoted to figuring out how to make that happen.
Yeah. Yeah. So a great thing about AI is like automating some of these like emails and follow-up systems and even sometimes call systems has been great. And so like as a young manager, there's a lot of ways to automate some of these like operational, inefficiencies that everybody always talks about. And one of
Mhm.
them is just bluntly outreach, right? It's like, how do I, scraping these email lists and asking my friends in the industry, who do you all reach out to? And so it's just like setting up like some of these email functions and like going through them the research that we've already done and then finding people that may potentially match, kind of the profile that we're looking for has actually been really efficient. And these AI
Mhm.
models are really, really good at getting personal. And
Mhm.
so by just kind of constantly updating our, database and like cross-checking names and everything, it's actually been not as hard as you would
So
think.
you've
It's
been you've been
surprising.
able to build. If I was in your shoes, and correct me if I'm wrong, like the hope is that you can build a cadre of experts that you can go to time and time again for
And
those industries.
that's exactly right. And so I find 3 to 6 people per industry that I think are really good, and then I get in contact with them. And so I'm building that as fast as I can. And so fortunately, I've been able to find the right people every time. Knock on wood, it keeps going that
Yep.
way. But yeah,
Yep.
to your point, I find a strong core of people in each industry, and I always go to them. Yeah. To get there, I had to build this like automation system, but with the tools now, it's super fast.
So, in reading a little bit more about Vitari, I see that you focus on quality of earnings and businesses with clear unit economics rather than broad narratives. Tell me what you mean by a broad market narrative, and why do you think like quality of earnings and clear unit economics is a better way to value opportunity? Or assuming I got that right.
Yeah, that's right. Yeah. So when I think of a broad market opportunity, I would say that is AI infrastructure. So when I think of like what is everybody talking about right now? And that would be
Mm,
AI infrastructure. Right. And then when
mm,
I think of like quality of earnings, you know, a lot of people talk about some of these hyperscalers, right? Which are these fast growing companies in these industries that are producing really strong results. Well, as you and I both know throughout history, hyperscalers, while delivering the highest returns, also have the most crashes.
mm,
And so these are companies that if I don't know a lot about, I want to make sure that the industry I'm going into has really strong businesses with strong financials, with a history of a track record and return. And so
mm,
what I mean by, broad names like, the Microns of the world, like the Samsungs, which are great businesses, right? And a lot of people are following them. And so, okay, so then how are these companies' earnings? Are their conversion metrics good? Or do they have a lot of inventory? Are they fast inventory?
mm.
How is their return on equity, right? Like it's not just learning about, okay, if it's AI infrastructure, these guys are building them. I think they call it the memory super cycle now, which is obviously very important. And then, from there, they go and invest in the names that are the most common.
Mm.
While that's a fair strategy, that's not quite what I'm as interested in. And so, yes, we did have some of those names I mentioned, but I want to really get into the nitty gritty. And so I'm listening to these earnings calls, right? I'm saying, okay, who are they working with? Who are the names in the industry that people are not quite following yet? And how do I get to and how do I invest in those companies, right? The unit economics, like, is the management team built for businesses like this? Have they been at companies that experience changed and followed through? Right, because AI is an area of change. So I want to make sure that the management team at these big companies are from industries that also experience this kind of change. And
Yep.
so that's what I kind of like start to really dig in more. And then we can look at like the technology they're building, like on their from the reports they give and so on and so forth.
So it's not like you're avoiding broader market narratives, but that's not that's obviously not the sole input into investing in a company. If you can
Exactly
find the
correct.
broad market narrative, maybe find companies that are underfollowed that could take advantage of that broad market narrative, and then making sure that they have the unit economics and the quality of earnings, all that that type of thing that you're looking for. In a way, that's how you kind of try to isolate. At least this is on the long side of the equity side of the portfolio, macro side of the portfolio, what you're really looking for from to find a candidate for that portion of that sleeve.
That's exactly right.
Got it. Got it. Well, we can peel back the layers of the onion on your other two strategies. First is AI, and then I want to circle back into your financial literacy work, right? So, from the perspective of AI, Venari is an AI era firm, right? You're not retrofitting AI into existing processes. So tell me, where is AI actually changing what you do as a small research firm, and how are you building it into kind of your DNA?
Yeah, so I think a lot of people when they think about AI is like changing the game in terms of like, taking jobs and creating jobs, which I think is very true. I think what AI does for a small firm is it kind of cuts the middle layer. So what I mean by that is there's a lot of small inefficiencies that exists across firms of all sizes. And so for our firm, there's a lot of things like keeping track of trades and like everything, which obviously the brokerages do, but kind of automating this processes you don't think would be very, time consuming, but are actually very time consuming. So making sure that like all of our reporting is done crystal clear. So like we make sure that we work with the third party admins, and then we make sure that all of the stuff is smooth line. So it's always
Yeah.
being updated at the end of the day or end of the week. Right. It's always making sure that our quarterly reports to investors have the most up to date information. And so a lot of it is more on the stuff that's not sexy. I mean,
Yeah,
honestly,
it's
right?
not
It's
necessarily
like
the research process at the
no,
it's the operations side of things,
exactly. It
customer
is.
service side of things, you know?
Exactly. That's exactly
Yeah,
right. Yeah. And I think AI is really good at improving things that could be more efficient. And so that's what we focus on. So I'm not
yeah,
pouring in a bunch of money into
yeah.
building the greatest AI research model. I don't necessarily need that. What would be more helpful to me is putting money into the operational infrastructure, like all of our legal structure, like being fully compliant, and then making sure that we're up to date on compliance. We're making sure we're up to date on our governance. And so that's actually been really helpful. It saved us a lot of time and honestly headache, because when regulators do the audits or anything, like we have everything ready to go from day one, and it's not a mess to find everything. So it's also organization, making sure everything is in the place where it needs to be at all times. Like, do I have a digital copy? Do I have a physical copy? Like organizing my folders on my computer, right? It's
Yeah.
the stuff that you think doesn't really matter, but in reality it adds up, because like I said, as we scale, I want to have all the information in the right place at all times, and AI
It also
allows me to
frees
do
you up
that.
to have more time on the investment research portion,
Exactly.
which
Yeah,
is how you
right.
make money, right?
Exactly. I'm in the business of making money. Right. Exactly. It streamlines all of that, and then I can get to the stuff that investors really want me to be doing.
Yeah, that makes a lot of sense. So on the investment research side, I'm imagine which of the three are you using AI for any of the three sleeves for to help you there? If so, tell me what you're doing.
Yeah. So AI is mainly used in the equity sleeve. When it comes to the systematic and options, like using AI for algorithmic trading is really tough. A lot of people that say that they have an AI trading strategy are full of what, like don't
Yeah,
believe
yeah,
them,
yeah.
right?
Yeah,
The
yeah,
only
no.
firms that can really do AI is like Jane Street and Citadel, because it costs billions. It literally
Yeah,
will
yeah.
cost billions. And
Yeah.
so that and that way, the systematic, having a
Yeah.
predefined strategy, executing based on market conditions,
It's a
that's still
large
the bread and
language
butter.
model. It's a large language model. It has nothing to do with systematic trading on quant.
Exactly.
Yeah, 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 yeah.
Exactly. Yes.
Totally.
Completely agree.
Exactly.
Right. And so
Yep.
so in the option and then the options, we have a discretionary trader that knows exactly what to look for based on these conditions and executes. Those are
Yep. Yep.
execution engines
Very,
through and through.
very quantitative approaches.
Exactly. Exactly. The AI is most used, obviously, I would say on the equities and the macro angle. So we talked about the broader macro picture, and that there's a lot of noise. There's a
Yep.
lot of noise in the markets. And especially in
Yep.
today's age with social media, there's a lot of people with a lot of opinions that frankly I don't care about, because they don't know what they're talking about. They're just pushing their
Yep.
own agenda. And so the
Yep.
thing that AI has really helped on, and the models that we've trained is cutting through the noise, right? Can I take a knife and this big loaf of bread, cut in the right place on the bread and get to the golden egg, as they
Yep.
say, right? And so for us, it's okay, how do I find the names that are not being found? To your exact point, I can go to AI, I can look at dark pool trades, I can look at all different things that if you have the right data feeds, that you can
Mhm.
just cut straight through it. And nowadays you can even look at like go through earnings calls and go through Charles Schwab and Bloomberg and tell me what are the most common names, right? I can search, it's that easy. And then I can look at, okay, so these are the names in the industry that are popular. And then I say, now, Claude, tell me the names that people are not talking about, right? And
Yep.
so with the context I give, I can get straight to the point of those underappreciated and underdeserved names. And that's
Yep.
been really helpful, right? Because
Got it.
obviously before, like a lot of research, you'd have to like even reading books, but following the newspapers and all this delay of information. So it's also the speed of information. I can find something out within like a couple minutes if I have like a specific question. And that also helps us with the execution time.
Makes sense. Well, it sounds to me like you're using more of the mass market tools like Claude, for example, right? What does it do? It sounds like it does some things well. Like you know, the risk of putting words in your mouth sounds like it enabling you to get some quick insights, like
That's right.
kind of separate the wheat from the chaff very quickly. Where does it fail? How do you know that the insights it's giving you are true or how should I say comprehensive, right? And not
Yeah.
missing key information.
Yeah, yeah. So we also have like a completely internal. It's called the Venari tool is the name we give it, and that was a completely custom tool we have. It's our own interface. We have all the third market data providers, that we built fully in-house now with AI. And so that is like the core information. And so I use LLMs as like the top layer. Okay, where am I going to find the exact, types of companies or pieces of information that I want? Then I cross-check that with like the Wall Street Journal, like the stuff that people are actually talking about. And then once I've taken my notes on all the research, then I go into like our actual internal with our databases, with our live data feeds, with our built out, trading tools and systems. And then I kind of really dig into the analysis. So I know some people use Bloomberg terminals. We have not used one yet. I've tried them out. They're great. I think for what we have and with the amount of amazing information nowadays, for smaller firms, if they can build out the right systems and processes, they don't necessarily need them right away. It's very expensive, right? And it's also you can't really take it with you. And so
And you're
we built
paying for a
out
lot of stuff you don't need, right?
exactly,
So like they
exactly.
have they have 100 different things, but even 5 or 6 of the things that you need may not be configured the way you really need them, right?
Exactly, exactly. And we were able to figure out what we really needed and put it all into the same place that was the most helpful for us. And so that's to answer your question. Like I said, like the LLM gives us the top layer, but when it comes to the nitty gritty, we use our own in-house information.
That's interesting. Interesting. All right. Well, like let's shift to a topic that we found out in the pre-call that's very important to you and I, financial literacy. So let me state it from my perspective and see how you're looking at this world. I'm a big believer in capitalism. I'm a big believer in the ability for markets to and amazing entrepreneurs to solve the world's problems, right? To understand the problems that need to be solved and apply capital and ingenuity to doing it, right? The problem is not everybody can partake in the benefits of capitalism as well as others, not because capitalism is broken, but from the perspective of, they may be starting with less. They may be in an environment where they don't have financial literacy is not part of the language of their family and their upbringing. And for me, one of the things that I'm passionate about is if you can teach people how to invest, to make wise financial decisions, understand the access to the markets that they could have, how to save so they can invest, that there's the upside for any individual is potentially limitless. And the question is that's not easy. That has to be built. You have to have a plan, an approach. You have to deploy capital, and people have to be willing to teach younger generation how to get there. So that's something I'm passionate about. It sounds like you became passionate about it at a 15 when you're 15 or 60. Tell me what you got into, why you got passionate about it, and like what is the continued work you're doing on it.
Yeah, I think you laid it out really well. And it's not just about teaching somebody, how to save money. It's teaching them how do you make money and how do you make
Yep.
something of your life and continue to provide value to others. And I think for my brother and I in particular, it was really on the wealth creation side. And so
Hmm.
like a lot of people learn to save money, but a lot of people actually don't trust institutions. A lot of lower to medium income families don't trust institutions for whatever reasons, whether they be valid or not. And so I think for us, it was learning about, okay, so how do we approach people at their level? And I think for financial literacy, what we really like personability and relationships. My family is big on relationships, whether that be friendships, having a girlfriend or boyfriend or partner, or friends or family, etc. And so financial literacy allowed us to meet a lot of people and learn a lot about different parts of the world, even within our own cities that we were not familiar with. And so not only did we get to make new friends and learn about new cultures and learn about new experiences, but then we could help them share their experiences with the world. When they make money, what do they go do with it? And so to your point about limitless opportunity, that's really the core of it for us. How do we help, given the privilege we have, to really make something? Right? It's one thing to say, I did it for myself. It's a whole nother ballgame to say, I did it for myself and I taught you how to do it for yourself. Then we're both fishing together instead
Hmm.
of me fishing and giving you the fish. So I think for us it was really the ability to help give back and just see tangible progress from these people. It's very rewarding and it's very
Hmm.
important that we help people around us because we only have so much time on life and then God willing we don't know when we're supposed to go. And so I'd always rather be remembered as somebody that did the right thing and gave back in the time that I had when I
Mm.
could to see where the world takes us. We have no idea the amount of talent that's not been developed yet because the systems weren't in place for them to get there.
I love what you're saying. It's interesting, right? The saying that everyone's heard, instead of giving someone a fish, teach them how to fish, right?
Exactly.
And no system, no culture, no country, no government is perfect. But what I love about the United States is that if you teach someone how to fish and they work diligently, they can really truly make something out of themselves. There is true upward mobility. The secret is teaching those people how to fish, and how can you do that in scale? And it's something that I'm hoping one day to turn more of my life towards at one point in time. It sounds like you're already rolling your sleeves up and doing that, and kudos to you. I think it's such an important thing that everybody has a stake in the future and has hope that if they put the work in, that they can actually turn it into something valuable.
I
Well,
completely agree.
so circling back to Venari, tell me one thing, if an allocator, investors looking at watching this podcast, this episode, tell me what you think is the most important thing that they should know about your firm and about you and your brother.
I would say that's a good question. And I think
Thank
for
you.
us, the most important thing that somebody should know about us, we are going to find the best answer in the right answer, even if it takes us a lot of time and research. And I what I mean by that is like a lot of the time people right now have that instant gratification. And a lot of the risk management and poor financial decisions are made by people that don't have, the delayed gratification. And so my brother and I as young managers, and it may not be the most conventional answer, but a lot of people our age don't have that. And so my brother and I are in it for the long haul. And when people invest with us, when people are giving us money at 22, we're going to be there at 32, 42, 52, etc. And so we are here for the long run and to build generations and build generational wealth. And we're not doing it here for just a short while, right? We
Yeah.
are only at the beginning and we're only
Yeah.
going to get better. And we've already had some pretty good results, I'd say, and keep going. But it's a time thing. Honestly, like
Yeah.
investing with us is just you're giving yourself more time. And yes, we may not have as much experience as other people on Wall Street, but with information being commoditized and with execution mattering more, us being in the field and building out our track record real time can be interestingly in some ways more valuable, right? Because I know exactly what I'm looking at. I know exactly what I need to work on because I see it and I can immediately work on that or fix it, right? Because I
Yeah.
see the track record real time. And so I'd say, in some ways our age can be an advantage because we're sponges. We're learning and absorbing so much information. And so it's not just investing in the person I am now, but in 5 years and in 10 years. If I am at where I'm at now, imagine the Noah 10 years from now. Who knows? Could be
No.
extraordinary.
No.
So
Yeah.
that's what I'd say.
That's fantastic. And newer managers, there's been a lot of studies on this. They actually generate alpha, and as their capacity grows and the constant, how should I say, momentum towards more, your alpha can decay, right? And the key, I think the risk is younger managers may not have a sophisticated risk framework. And so I think the thing for you is to demonstrate to allocators that you do have a sophisticated risk framework in place. Maybe that's something we talk about on another episode. But it's been a pleasure having you today.
Thank you.
I hope people find you through this podcast. And once again, thank you so much for joining us today on the episode of Scaling Alpha.
Thank you so much.
Thanks everybody for watching. We'll see you in the next episode.